Income Tax 2020 Tax Software Example Renting Part of Property. Come in, relax with Income Tax 2020. Here we are in our Intuit Tax software. You don't need the Intuit Tax software to follow along, although I do think they have a 30-day free trial. So if you can get access to a promo or demo version of it, it might be a good tool to practice with. We're going to be focusing in on the Form 1040 and the Schedule E, going back and forth from the data input to the forms as we run different scenarios. The software helping us to do that. Starting point is going to be our Eric Smith, single filer, living in Beverly Hills 90210. He's got the $100,000 of the W-2 income. The rental income is flowing in from the Schedule E into the first page of the 1040 at the $20,000 to bring us up to $120,000 of the total income. We have the standard deduction of the $12,400 to bring us to the taxable income of $107,600. If we then go to the Schedule E, here's what we have thus far in the Schedule E. We have the $50,000 of rents, $30,000 of the repairs, and that brings us down to the $20,000. That $20,000 is what is then pulling over to the first page of the 1040. Now, what we want to think about here is a situation where we are renting part of the property, and basically how are we going to do the allocation method to be allocating some of the expenses through part of the property if we have to use some type of allocation of the expenses. Now, notice on the income side of things, there is no allocation component, because obviously the income is coming from the part of the rental property that we rented. Otherwise, we're not going to get any income from it. But the expenses then, we may need some allocation between the expenses that are going to be personal and the expenses which are going to be business, and we might need some kind of ratio method to do that. So the problem here is typically going to be using some type of activity base for the allocation method. One of the more common methods we might use is a square footage, as we thought about when thinking about a Schedule C for like the business use of the home kind of calculation. So you could take the square footage of the amount of the property that is being rented compared to the total square footage, and that would be the allocation that you might use to those expenses that are going to be for both business and personal. So if you had, for example, 100 square feet, just to make it rounded, that are the amount that's going to be rented divided by the total property, which was 1,000 square feet, then you'd have 10% of the allocation. That would be your allocation base for those expenses that need allocation. Now, I just want to talk a little bit about logistically how that might work here in terms of the bookkeeping process and in terms of the tax preparation. For tax preparation, you're going to have to determine, if you get an income statement that's basically the rental income statement from somebody, how are they doing the bookkeeping related to these expenses? Meaning the income statement provided to you, have they included total expenses that they paid for the entire year that you are then going to have to apply out this ratio, this 10%, to those expenses where it would be necessary? Or possibly they have already done that. Did they do that in the accounting software, applied out properly the expenses, and you just need to take that income statement and then put it into the Schedule E here? So that's kind of what you have to figure out. And if you go through just some of these expenses, advertising, of course, you would think would be all for the rental portion, because you don't advertise for the personal portion. So you'd think any advertising expense would be here. Auto and travel, you got the normal kind of complications with the automobile to be breaking out between personal and business. Cleaning and maintenance. Now, if you had cleaning and maintenance on the entire home, then you'd need to break it out and possibly using the ratio. But if you only have paid cleaning and maintenance for the rental portion of the home, then it might be something allocated directly to the rental. If you're talking about commissions, now the commissions, if you're paying some kind of commissions related to the rental property, it's probably that all rental property. You don't need to allocate between personal and rental typically in that case. Insurance, you would think that would be on the total home, and therefore you would probably have to allocate between the personal and business. However, if you have business or insurance just on the business, like liability insurance or something like that, then that would possibly be all for the business portion. Management fees, if you're paying management fees, you would think that would, of course, only be for the business portion of the home, and it wouldn't be something you would have to then allocate between personal and business using a ratio. And then the management fees, the mortgage interest, probably on the entire property, of course, and you would have to be allocating that between personal and business. And if it was like something that would be deductible on the Schedule A, you might have part of that personal component deductible, but not on Schedule E, that then being deductible on Schedule A. Other interests, similar. Repairs, if you had the repairs on the business property itself, meaning on the rental property, then you can allocate it all to Schedule E. If there were repairs were on the house in general, benefiting the entire property, then of course you would have to be allocating out between the two on that type of situation. Supplies, similar situation. Taxes, typically property taxes being the big one. It's going to be on the entire property, so you're going to have to allocate between business and personal. Utilities, probably going to have to allocate between business and personal. And then the depreciation, you're going to have to make sure that you set up your depreciation properly so that it's going to be doing the proper allocation. That'll typically be done in the tax software and not so much possibly on the bookkeeping side of things. So now let's just think about, well, if you're dealing with QuickBooks or something like that, or any kind of accounting software, and you're trying to do this allocation, you could do it like in the accounting software possibly, and then, or you could do it basically outside of it. And if you're doing tax preparation, you could take someone's income statement and do this kind of analysis and try to figure out which of the expenses need the allocation process. So let's just take a quick look at QuickBooks. I'll jump on over here and just say, well, how can we use a tool to do this allocation when I'm spending money and it's going both towards business and personal? How can I do that allocation while I do my bookkeeping? Well, one way is to use classes. So let's just get an idea of that. And many different accounting softwares have a similar kind of function. So this is QuickBooks Desktop. So you can turn on class tracking, which allows you to kind of break out your income statement by column. So, and if you use Xero software or many other softwares, the big softwares, whether you do online or desktop, this is desktop, online, has the same kind of functionality. So if I go then to properties, I'm going to go up to the accounting up top. I'm going to go to the company preferences, and I want to turn on the class tracking. I'm going to say turn on the class tracking, and it's going to prompt me, and I'm going to say, okay, let's turn this thing on. And if you haven't had it on all year and you want to do this like at the end of the year, you can actually do that. You can go into you'd have to adjust your transactions or do a journal entry. And we have some courses on that if you want to take a look at them. But you can go back in and do your year-end tax preparation in this format. You can add classes and then do your allocation between the classes and kind of do an analysis, analyzing what needs to be done. So now if I just enter some expenses here, I set up this. I'm going to go to the edit or lists dropdown and the chart of accounts. So here's our chart of accounts, and I set up just a new account for rental property. I'm just going to enter some expenses here, and then we'll see how this kind of allocation method could work. Okay, so one more thing to set up. I'm going to go to the lists dropdown, and I'm going to set up my classes now. So I'm going to say class lists. I want to set up my classes. So I'm going to set up the classes. I'm going to go to the classes dropdown rise up. I'm going to go say new, because it rises up even though it has a drop down. That's why it's a drop down rise up, if you're wondering. And then this is going to be then business. I'm just going to say B for business. So I don't have a long class name. And then I'll have another one. And then I'm going to have P for personal. B and P. And then I'm going to close that back up. And then any transaction we put in place here, I'll just enter them into like a check. Let's just make a check. I'll go to the home page, and so I'm going to make a check, and I have to set up a checking account to do that. So hold on a sec. Let me set up a checking account as well, and go to my lists drop down chart of accounts. I'm going to add in the account drop down rise up, new checking account, please, bank account, continue, and this is going to be the checking account. Check it out. It's the checking account. Save that. Okay, let's try it again. I don't want to set up bank feeds or anything, so I close that out. Okay, so then we're going to say, let's write checks. Write checks. And we get our check form coming up here. And then I'm just going to go through some of these common expenses. So if I go, okay, well, now there's an expense for advertising. Now that I would think I would have to, I could put the whole thing towards the business, right? I could say, okay, this is going to be for, let's say, 01, 15, 20. And this is going to be to the advertiser company. We're paying the advertisers, paying like Facebook advertiser or something. Vendor. And this is going to be for let's say 800. And then I'm going to put the whole 800 here. I'm going to put it to business, the whole thing to business. I don't need to prorate it because I didn't advertise the personal part of the property. So I'm just going to put it all there. And then I'm going to say, let's do another one, save and new. And what we're constructing is the income statement. That's what's going to be used for the Schedule E. That's where our focus is. So I'm going to go to the reports drop down, company and financial, profit and loss, but we want to see one by class, profit and loss by class. It's a classy profit and loss. And this is going to be 010120 to 123120. So there we have it. So now we only got the one class of B. So I'm going to go back on over and then say, let's do another one. So advertising, and then we had automobile. I'm not going to deal with the auto. We dealt with that in the Schedule C, and obviously you have similar kind of breakout problems between business and personal and whatnot. So let's go to the computer and internet. Now this may be something that you're going to be charging for one, but you might be using business and personal for this one as well. So let's put the computer and internet, we're going to pay Spectrum. And I'm going to say quick add vendor. And let's say this was, let's say 150. And now if you're breaking this one out between the business and personal, like it's kind of like a utility that you're breaking out. And then we're going to multiply it times that 10%. And I'd say 150 times the 0.1 is going to be the 15. I think you can actually do that in QuickBooks. So I can take this, I could say this is going to be times, not plus. Hold on a sec. And then I'm going to say times, there we go, 0.1, and it'll do the calculation, but I still got the 150 up top. So I'm going to break it out between two accounts, and this is going to be the personal, no, this is the business portion, and then computer, same account, but this is going to be now the difference, the 135, which is obviously times 90%, right? It's the 150 times 0.9, and that's going to be the personal component of it. So we can do this breakout basically as we go in QuickBooks, and I could say save it and close it, and there we go. So now we've got that breakout. Now note that if we didn't do that, like say let's say it's the end of the year and I just turned on my classes at the end of the year and I'm trying to do this allocation like at the end of the year, you could actually go back in here and say, what if I didn't do that? I'm going to drill down on this and say, well, what if I turned on my classes like at the end of the year and now I want to do this allocation to figure this whole tax thing out? So then I could say, this is going to be 150. This is how I put it in originally. It had no classes. I didn't have a class because I wasn't classy yet. But now I'm classy. And so we're going to add the classes. So then you can actually go into your profit and loss by class, and it'll be uncategorized. And you could go into all the uncategorized items and then categorize them. So I can go into each one of these. And if it's a small rental, you might not have too many of these. If it's a big one, you might have a lot. You might do a journal entry instead or something. But I can drill down on this and then add the class. So now I'm going to say, I have become classy, and I'm going to add the classes now by saying this is going to be 150 times the 0.1, and this is going to be business, and this is going to be computer, and the 135 for the personal. And then you can break it, so you can actually go back in afterwards and break out these classes so that you can prepare your bookkeeping to be input into the data input. And now I've got my breakout between business and personal and then the total. So if we go on back on over home, and let's say we're going to write another check. And so we always checks. Money's always going out here. We're going to say bank, depreciation, dues, insurance. So insurance might be another one that you're going to be breaking out by class. So let's say this was at 1.5. Let's bring it up here. This is going to be the insurance company. And this is going to be, we're going to pay them 1.5. And then I do the same thing. I'm just going to say 1.500 times 0.1. That's going to be the business portion. And then insurance is going to be the difference, 1.500 times 0.9. And the total up here should be 1.500. And this is going to be the personal side. So I'm going to save it, going to close it. we're constructing our income statement over here. We got this nice breakout between business and the personal. So it's back on home, back home, back home. And then we're going to say that we had insurance. Interest would be another one. This would basically be the mortgage most likely. So we're going to say mortgage company. And then if I spelled things wrong, I apologize. I'm deeply sorry if I offend anybody with my spelling. And this is going to then be 2300 times 0.1. And this is going to be business, and then interest, and the difference is going to be the personal. So the interest broken out, we're going to say save and new this time. Save it, new it, and then we'll go down. So that's insurance, interest, meals and entertainment, supplies, payroll expenses. Obviously, if we have payroll, that would be business. We don't have to break that out between business and personal because we're paying people for business, you would think. So professional fees, if we had professional fees related to the rental property, then we wouldn't have to break those out, you would think, right? Those are going to be professional fees, possibly mortgage brokers, lawyers, accountants. So we'd say these are the lawyers company. And so we'll say that we're going to quick add those. Vendor, we're going to say that they are going to be having, let's say, 570 professional fees. And that's all going to go to the business because I'm not going to break that out between business and personal because we paid the lawyers for business stuff. That was business stuff related. And then we're going to say, all right, let's say what else we have here. We've got the professional fees, maintenance. Now, you might even have two maintenance accounts here because you might want a maintenance account for like general maintenance, and then you might want a maintenance account for those things specific. In other words, you could set up, two maintenance accounts here and say, these are the maintenance things that I'm going to allocate out, and the others are going to be things that I'm not. So if I went to my chart of accounts, because maintenance is one of those things that you might oftentimes be repairing just the rental property. And sometimes you might be doing things in general for the entire home, and you might do some maintenance just for the home, right? So I might say, like, edit this account, maintenance, repairs and maintenance, rental, and then you might do another one and say, I want another one, and say new account, and I might say, I need a repairs and maintenance, repairs and maintenance, entire property, or let's say general. So we might say that, save it and close it. So you could set it up basically this way, or you might even have a sub account. You could have a parent account and a sub account. So I might add another account and say I want a new account and make this one the parent account. And I'm just going to call it repairs and maintenance total. And then I could have these two sub accounts here. I'm going to now make these sub accounts. I'm going to edit this one. I'm going to make it a sub account, and now it's going to be a sub account of the repairs and maintenance. And so that means it's going to be underneath it. So I could just call it general versus rental. So general being the entire property, rental being for the rental property specifically. So I could edit this one and say I want to make this subsidiary to the repairs and maintenance account. So there we have it. So now we've got that broken inside here. And so now if I write my checks, I could say, okay, this is repairs and maintenance. We put this to the contractor 1. Contractor, we paid the contractor for repairs of, let's say $750. And let's say this one went to repairs and maintenance for the rental property specifically. And so we're going to put that to the rental property. So that just goes to business. But then if I did other repairs for the entire house, I might say, well, now I'm going to do repairs for the entire house, write a check and say this is going to be for the contractor 2 that we hired. Contractor Mr. 2 is going to be, let's say 1900. And this is for repairs and maintenance general for the whole house, which I'm going to break out between the 1900 times 0.1, and that's going to be for the business, and then repairs and maintenance for the personal, which I'm also going to put the repairs and maintenance general, but the general accounts I'm going to be breaking out between the two. So this is going to be between business and personal with the use of the classes, the classes. So there we have that. So I'm going to say save it and close it. So that's just some kind of example of how you can do this. And if I go to my profit and loss now and say I want to update this, you can see here's my parent account that I can break out, and everything that's on the business side of things, this one here for the rental property, it's all under business. And this one, everything that's under the general should be broken out according to our ratio. So, and that's one way you might want to kind of think about it. If you have any things that it's going to be in a similar fashion as that, you can make two accounts, and anything that you know should be broken out, you should have it broken out by the ratio. And anything you know shouldn't be broken out is all going to be under the business side of things, or all personal side of things, possibly, if you have the personal stuff in there as well. Now, if you don't have this, like, you could export this to Excel, and if you get something like just the totals over here, then and you get that as a tax preparer, then you might have to do this work yourself. Also note, if you have QuickBooks, you can do this at the end of the year, like we said, by drilling back down on it, setting up the classes, drilling down on it, and doing this breakout within QuickBooks, and then you can make adjustments to it as necessary to try to figure out, what is best. And then if you get this information and you're trying to enter the taxes, let's export this to Excel and just create a worksheet for it. I'm going to export this to Excel, export, and then I'm going to create a new workbook. We're going to create a completely new workbook, and there it is, has been created. Amazing. I'm going to go to the second tab. I'm going to say okay. I'm going to go back to the first tab, and I'm going to get rid of these split screens because they're very annoying. And that's going to be in the View tab, Windows, remove the split. Okay, so now I'm gonna make another copy of this just so we can see it in another. So what if you didn't have this breakout between business and personal, and we just had the total that was provided to you as a tax preparer, and they're going to say, hey, look, this is all the stuff that's business related. Oh, hold on a second. Let's copy this. Copy and paste it like 1, 2, 3. 1, 2, 3. Okay, so now let's do that. And then I'm going to delete this. And I'm going to remove the totals. That total's fine. Let's remove that. I'm going to delete. And there we have it. So now let's just say we have these expenses here, this part of our income statement. Then how would we break it out? We would, of course, have to go into this and then use our ratio to the items that would need to be broken out by a ratio. So we might just go through this one by one and say, okay, well, the advertising, we might color code this and say this. Well, advertising doesn't need to be broken out with using our ratio. So that one is good the way it is. Computer, I might need to break out the computer using our ratio between business and personal, because that seems like a utility, so I might say that one. Insurance, I probably might have to break out. Interest expense, I might have to break out. So I might like highlight these. Professional fees, no, because that's probably all business. And then down here, it looks like they got repairs and maintenance for general versus the rental, so possibly this one I need to apply my ratio to. And then we can take our income statement and do our ratio allocation, possibly saying this is going to be 0.1, 0.1, 0.1, 0.1, and make our adjusting entry, which is going to be this times this. And this is going to be 1, 1, 1. And let's make these percentify these. Home tab, percentify. And this will be 1 or 100%. Okay, so now let's allocate this out. So if I allocate this out, and this is kind of like the type of worksheet you might need to do then to allocate your expenses if you have an income statement that hasn't allocated between business and personal. And this would be 100. So then if we add these up, the total expenses then we're adding up to the 2007-05. Is that the same 2007-05 we have over here? Yeah, so there's our 2705 here as well. So you might have to do kind of a worksheet analysis. It might be easiest to put something like that in Excel and then do your ratio analysis, determining which ones need to be allocated out. Do your worksheet in Excel so that you can have an easy data input to put that information then into the Schedule E.